Hey guys, it's a market update. A Merry Christmas. It's been a fantastic year, right? So with BTC, we're up 130% on the calendar year. And then since the bear market lows, 480% or so. A crazy performance. But I think next year we go again and we have another good year. And I'll show you why in this video. So you can see tactically here, just on the daily chart, there is a support level around, 90K or so. I think we probably touch it, right? You can see a little bit of risk off in markets. Global money supply and liquidity is just contracting a little bit. We can actually see that right here. So this is global liquidity, 1-for-1 with the Bitcoin chart, a little bit of a drop off over the last, few weeks or so. And so it makes sense. We just have a little pause here, get Christmas, New Year out the way, right? You can see that global liquidity, or this is money supply here, just tracking down. This is from Joe Consorti. Bitcoin price in orange may track down as well. This is fine. This is good, right? Thank you very much for this opportunity in a bull market. We're going much higher next year because the Fed still has to help the Treasury refinance the bulk of its debt, and that's happening next year. So I think central banks just want to cool off a little bit, right? This year, clearly they've pumped markets. Now they just want to cool off a little bit because the Treasury refinancing, that's the main thing. And they need markets cool, they need to bring everything down, and then they can refinance. And that's going to create a lot of inflation, a lot of liquidity in markets, pushing asset prices higher again. And that's the real one, right? That's the big final finale, right? Where we usually get a blow off top for BTC. And that's going to obviously lead to the next bear market at some point. But next year, very, very bullish. If you trade, check out Bybit, 30,000 deposit bonus down below. And if you can't trade on there, Apex is Bybit's DEX. So trade straight from your wallet. You can get a permanent fee discount on there as well. Link below in the description. Bitcoin cycles are 3 years on, 1 year off. So 3-year bull market, 1 year absolute terrible bear market. Well, we're in year 2, right? So this is up here since 2011. You have Bitcoin, 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 something else. Bitcoin, 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 something else. Bitcoin, Bitcoin, and 25 is Bitcoin again, in my opinion, like I said, because that's where the bulk of the refinancing happens. That's going to be a lot of liquidity. But let's just take a breather right here, and dips are for buying in a bull market. This is very important. The drivers of the bull market are long-term and fundamental, while the drivers of the pullback are short-term and tactical. This makes it a pullback opportunity, not a reversal. Exactly. This is a bull market that we're in. You can see 2023. If we ended here very, very early, this isn't Bitcoin cycles. This is central bank cycles of refinancing their debt. And that is going to happen. It 100% is going to happen. We are in a bull market. This is the surest thing ever, that the debt has to be refinanced, and they're going to help the Treasury do that, drop rates a bit, liquidity in markets. That's what is going to happen. And so Bitcoin must do well in that regard, right? Over the next year or so, we wait for the bear market, but you can see we've got another leg or two for this bull market to come until we're very, very overpriced. And that is going to be happening next year, in my opinion. So not selling, please pull back more so I can buy some. I think a lot of the risk in Bitcoin previously was, is this thing actually going to be successful? Like, are people going to demand it over time? The answer after 16 years obviously is yes. It's actually becoming more demanded over time and more integrated over time. So I'm 100% on that. Now, the other side of the trade is, are fiat currencies going to continue to get debased? And I'm 100% on that as well. We've literally got thousands of years of history of currencies getting debased. So two sides of the trade of our generation. It's growing at 50% a year. That's a good trade to get into. Not to day trade, just to buy it, especially when it dips. If you get any dips, great. Bear markets, absolutely awesome. Get involved, because that is where you buy, right? So annual inflation in the euro area, 1.7%, down to 2.1% in the EU. GDP, 0.4%. 0.9. What is this, right? So there's no growth in this area. Now imagine, the amount of money they printed over the last 5 years is insane. And they have 0.4%. It is awful. This whole entire continent is literally just eating itself alive. It's shrinking, yeah? And so they need GDP and inflation high, because if this doesn't happen, the debt-based system collapses and you get an 80% drawdown on everything. Now that happened in 2008. And they don't let that happen anymore. So they print money. They'll print as much money as possible just to keep these things above zero. And that's what they do. So is money printing going to continue and stimulus going to continue? Yes, it will. The other side of that, is Bitcoin the strongest asset to price that in? Yes. So that's the trade of our generation. Buy it, because we are so early still. These guys are a joke. US versus Europe versus China stocks. I mean, look at the stock 600. Right? Look at MSCI China. I mean, you can't invest in Chinese stocks, right? You just can't do it, right? You just can't. So Euro, again, it's literally gone nowhere, right? It's just the US that has literally outperformed, and BTC, which has basically outperformed. You look at the S&P value in Bitcoin, it's down 99.9%. Now, Bitcoin is younger, I get it. But there's a few things to invest in, and most other things are absolute garbage. How could you invest in Europe? This is real GDP in the UK. It's just absolute 0.1%. That is on the back of all of this money printing that they did over the last 5 years, right? They basically, increased the monetary base for 50, 60%, and they still can't get any GDP or inflation. So the currency must be debased, because if they don't debase it, then what will happen is the financial system will collapse again, and an 80% drawdown. They don't let that happen. So what they do is they print the money, and then 10% of your purchasing power, if you've got the money or the bonds, seeped out every year. And so what's funny is that they actually force in the UK through law pension funds to hold UK bonds, right? Because no one actually wants to buy those things, right? No investor's saying, I want to buy some bonds. They actually force it through law, right? So what they're forcing is essentially economic communism, the socialization of the losses, 10, 15% a year. Now, if you're young, you're going to get wrecked. But you have a solution, which is BTC, to price all of this in. Bank of England says pension funds were hours from disaster. I mean, what we're seeing, don't get worried about recession. We're literally in one, 20 years of recession, 20 years of literally just imploding in on ourselves. And this is the recession that we're in. It's a large 20-year recession. And if you want to escape, right? If you want to escape, you have to be in assets. And actually, the best asset is not housing. I understand you need to live somewhere, but you're pricing the house in the fiat currency, which is also collapsing. You have to price the house in Bitcoin, which is world capital with a cap. It prices all of this in. That's why everything is getting demonetized in BTC. I know we want to trade Bitcoin through cycles. If we can time those, then we can make some more money. But I'm here to say that there's probably nothing we can do that's better than just holding Bitcoin for as long as possible, because Bitcoin is the only measuring stick that can actually price in the wealth created by the world, right? So you have a measuring stick that's fixed, and then you have wealth creation, people actually just creating abundance in goods and services. Since the 1970s, the fertility rate has dropped. Why since the 1970s? What's going on there? Since the 1970s, this same time, you get huge price inflation. This is Campbell's condensed soup, right? The same product all around the world, the same thing since they invented canned soup, right? It's the same product. Why is the price going up like this? Why did it not go up, right, for decades? And then suddenly in the 1970s, what happened in the 70s? Well, it's when the US went off the gold standard. They weren't on the gold standard, but they actually did have gold, and they could get called by other governments, right? And they said in the 70s, we're not going to do that anymore. We're just going to print money, and that's that. And since then, the whole entire structure of our society has collapsed. No one can price anything. This isn't good, is it? Right? There's more and more and more money in the world, right? So that's the issue, all right? And so instead of getting all your money debased and your purchasing power debased, if you're in stocks or any currency, just the first thing is Bitcoin. Right? And then if you want to take risk on that, you can. So some altcoins will outperform, some stocks will outperform if you want to be an investor. But for the whole world, this is it. This is the trade of our generation. It's even more damning when you realize this increase is occurring despite all the technological innovations in production and distribution. The price should be falling over time. Now, it's not going to fall if you're holding dollars or debt or anything like that. But it will fall in BTC terms because it's the only measuring stick. Things should be going down in price, not up. Now, when you look at the fiat system, that cannot go down, okay? Cannot go down because everything will draw down, all the debt will go insolvent. So what they do is they print money to take 10%, to socialize the losses by 10 to 15% a year. And that's why everyone in Europe feels like they're getting poorer, because they're not creating any wealth and more of their money is coming out. And it's like they wake up 20 years later and they're like, all the wealth is gone. So if you want to escape from that, you have to buy assets. But you can't buy assets priced in those rubbish currencies either, like euros, right, pounds. That's not going to work either. Look at the English stock market, the UK stock market, look at the Euro stock market, garbage. You need to price everything in Bitcoin first. And if it outperforms that, maybe it's worth it. But not many things do from a risk-adjusted standpoint. CPI just goes up and up and up and up and up. The only way to measure the world is through Bitcoin. This is the total receipts of the US government. Receipts are going up. Now, remember, debt to GDP. They have to get debt to GDP down. So you can't cut the debt because you collapse everything. So GDP has to rise. That's why they need asset prices going up. That's why they need inflation. So asset prices go up. It's part of the system. They have to go up because they want to get the debt side down, which means you have to grow the GDP side. Be in assets. This is the prime asset of the world. It's got so much growth in it. This is the trade of our generation. Bybit deposit bonus down below. If you want to get a fee discount on Apex, if you trade from your wallet, check that down below as well. I'm James' Managing G. Merry Christmas, and I'll see you in the next one.